Good afternoon or good morning for us. It's afternoon. Sun's coming around the backside of the house. Gonna have sunset today around 2 p.m. I think. I'm just kidding. It happens at like 4:30 as we enter this long dark period of winter coming up in fall. Welcome to another episode of Everyday Trader. I'm one of your hosts today. I'm Eric Hale with Trader Oasis, and I'm also joined by friend, colleague, partner Greg Jensen.
It is good to be with you, everyone. I was actually having a conversation with a friend about this just last week. It's been 30 years ago, spent a couple years in Sweden, up by the Arctic Circle. And this time of year is just awful. Sun comes up at 11, goes down at 2. Between now and about the end of January, you just kind of survive, right?
You feel long summers, though.
Yeah. No, that's the awesome party time.
Really cool. I had a lot of fun in Sweden. It's really, really nice people. And the thing that blew my mind is there is no shortage of McDonald's.
No.
Go to McDonald's. There are McDonald's and lots of like Ford trucks and Volvos, of course. But you see lots of big pickup trucks, GMs and Ford trucks. And I'm like, McDonald's, Ford trucks. I almost feel like and everybody speaks English and they're cool. I almost felt like, I'm not going to say I felt like I was in America, but it was a very hospitable country.
Yeah, no, I enjoyed living there. It was a fun time. So,
but that's not what we're here to talk about. We're here to talk about markets and what's going on. So this week we did get some economic news that really surprised to the downside, and that is inflation. I was looking at the forecasts, and we had, if you did a bell curve of the forecast of economists, we were 2 standard deviations below the forecast, the average forecast. So it surprised everybody. We often say that it's not the number, but the expectation of the number. And so, whatever, the number could come up good and bad, but if everybody expects good or bad, then the market doesn't really react. But we definitely saw a very positive response to the market this week with, you don't usually see, did you see the gap that just happened on SPX? You don't usually see gaps like that.
No, it was a big surprise to the upside. And obviously the market is pricing in the idea that because of that low inflation print that we got out of the CPI, that the Fed is done. And that the hike that had been potentially coming in the next meeting in December is now very low likelihood that it's going to happen. In fact, it's likely that if there is any type of move, that it's actually going to be back to the downside starting middle of next year. I don't know if I still am in the agreement that the Fed is going to cut rates anytime soon, but they may be done with that inflation print. Now, the other thing that I would add to that, however, is that the CPI is not their preferred tool. They like the PCE. So if we get similar data next week from the PCE showing a big drop in inflationary pressures, then maybe that will impact the Fed's decision on their next steps in the tightening path. But I guess the reason why I'm still in the camp of I don't see them needing to cut anytime soon is the economy seems to be doing okay. I mean, earnings season just kind of wrapped up, and for the most part, earnings were really good. And there were a handful that weren't as good, and I think those are individual stories, maybe companies that are overburdened by debt. Some of them maybe just not executing as well as their competitors. But I think as a whole, earnings have surprised to the upside. Inflation seems to be coming under control. Maybe the Fed, I know we've been talking about this for over a year since we've been battling this inflation, and there's been this fear of can the Fed generate a soft landing, and they may have pulled it off. I don't know. What are your thoughts? Is inflation done?
I'm thinking the same thing. I'm reading the same headlines. There's a new rule that's getting a lot of attention. I think we mentioned it earlier. Claudia Sahm, who worked for the Federal Reserve and came up with the Sahm rule, which looks at the moving average of unemployment and when this number the change gets above 0.5, we've had recession, and we're at like 0.33 now, and it's moved. So it's pretty significant change when you look at that chart. And she's actually the one saying that we might not actually get, even if it goes above 0.5, that doesn't mean we're necessarily going to have a recession. So she's sort of backtracking as well. I think the read is that we not you and I so much, but people love to beat up on the Fed. And I really think they've done a great job of threading the needle, which is a combination of communication and setting the policy right. And everybody loves to bash them. And when you talk good about the Fed, nobody clicks on it. But if you want to get apoplectic about how dumb they are, they're not stupid people, and they're not trying to crash the economy. They're doing the best. And it's kind of challenging. We mentioned here that it's not just monetary policy, fiscal policy from Congress makes a big difference. And the analogy I use is you got one party pressing on the brakes, you get somebody else pressing on the gas. And so the Fed's trying to respond to a crazy Congress doing whatever it's doing. But things I think are looking pretty solid. I was looking for the weekly reports, the jobless claims this week. We actually came in pretty strong, back to like what would be pre-recession potential levels. So there's plenty of signs that are out there that the economy is doing fine. I mean, inflation is a problem, and we should probably talk a little bit about CPI to dive a little bit deeper into why. This is a chart that I like to share. Let's just talk through the CPI a bit. And I'm a trust but verify person, and I always want to take a look at the data and look at the graph. I look at numbers and I don't really see it. If you look at what's in the CPI report, there's all kinds of stuff, everything from residential phone services, airline tickets, medical care services, shelter, distilled spirits at home, pet food. And is beef jerky in here? I don't know. Jewelry's in here, just about everything, peanut butter, roasted coffee. So there's hundreds of items that get surveyed, and we look at those. They're all not important. Some of it more important than others. So I like to take these and sort these based on importance. And the number one is the cost of living, your shelter, your house. So rent of shelter does take into account you might say, oh, I don't rent, I own a house. You're in there. There's a formula that takes that in there. And medical care services is number two in terms of impact to the CPI, and transportation services is number three. And if you look at those are up slightly. Education, you say like education, why is education? It's communication services happens to be lumped into this group. So your cell phone and your cable bill, those are flat. In new vehicles, slightly negative, but this is the one that probably caught your eye, and that is gasoline down 5% month over month. And that is the real reason why CPI dropped, is we've seen just this crash that's happening down in oil. I don't know if you've been paying attention to the price of crude, but it is certainly dropping. So this is the CPI report based on importance. If we look at percent change, photographic equipment was up a whopping, was it like 6.8% month over month. So all of you people, going out and buying your Nikons, who buys cameras anymore? So that's why this has basically no importance to the ag. Doesn't even fats, oils, tobacco, furniture, bedding. So these are what went up. If we scroll to the bottom to see overall what went down, all of the important things, I think, most of the important things are leaning more towards the negative side. And this is exactly what the Federal Reserve wants to see. And that's, as you mentioned, it's not what the CPI is not what the Fed looks at primarily, but they do look at it for sure. PCE next week will give us some insight. And I think if we get a really good PCE print, look out, we're going to be blasting off even higher. This gap in the SPY is just the S&P 500 is just amazing. Any reactions to the CPI?
Yeah, it was a much better than expected. I say better, much lower than expected, because we want it lower, right? We want to see inflation under control, and I think you're right. I said this a couple of days ago, I did one of the daily market updates for those of you who are members with us over at Options Animal. I talked about specifically the the print that comes next week in the PCE, if we and I basically said exactly what you just said. If we get a good report from PCE that is similar to the CPI report, then yeah, I think we could take off towards the end of the year, and really have a bullish year-end rally. We'll see what comes next year. And obviously oil's volatile. I mean, it's been down. It's up 4% today, so it's bouncing a little bit today.
Really nice.
So I actually entered a bullish oil, not oil. I did a bullish trade on one of Warren Buffett's favorite companies that he owns.
Okay.
Again, I love Occidental. It's an amazing company.
Oxy? Oh yeah.
Yeah, I love Oxy, so I trade it often. Very tradable, very good company.
You saw, I don't know if that's a good thing to talk about. First of all, here's your oil. This is today's intraday price. So yeah, big bump up on oil. And it's ironic that you're not copying over my shoulder or anything, are you, Greg? Because I shared a trade on USO today. A very bullish trade.
Do you know what? I beat you. If you look at it, I beat you. We've shared our trades. I sent it out like 4 minutes before you did.
And yours was on Oxy?
And mine is on Oxy. That's when I saw yours go out. I was like, oh, we're both thinking oil today.
We are. Because I actually didn't know what you were. I saw you did yours, and I was in the middle of sharing mine. So
yeah.
Mine was based on Goldman Sachs straight up yesterday. Came out with a call, very bullish on USO between now and April. I didn't expect it to happen today, but certainly if I jumped on the call yesterday when I saw that report, probably would have been.
So do you think, again, going back to how we got on oil discussion, I mean, oil's come down from $90. If we get a really bullish move in oil between now and April, and those other components of CPI stay steady, if we don't see a decrease, are we going to see inflation rebound and see some big misses coming up? Because I mean, if oil prices go back to $90, I don't think gasoline prices are going to keep going down either.
Yeah. The transportation component, at least on the headline. So we talk about core and headline. So core CPI, we pull out fuel and food because those are more volatile and they're very subjective to the price of transportation and price of fuel. And so, if we get a spike in oil, and there's certainly plenty of reasons to be freaked out about it. I always try to, the promises of the bad things that everybody's talking about, like we talk about geopolitical risks that are happening. We got 2 wars going on right now, proxy wars that we're having in the Middle East and in Europe, and who knows, might have. Well, I guess with Xi being here, we probably are not going to have one in Asia. Thank God. That seems to have gone well with Biden meeting with Prime Minister. Is it Prime Minister? Xi?
Emperor. I think it's what.
Oh, dictator. That's what it is.
Dictator.
Biden called him dictator 5 months ago. So I don't think he's calling him a dictator anymore.
Yeah.
I think that was an issue. But yeah, that's really great to see them moving together and some business leaders moving. So I think that's a good reason to be. That was one of the really scary things. You and I know that we've talked with Jonathan Ward, who's an expert on China relations, and there's some real fear. Thankfully, I think he's advising the right people, and policy is changing based on people like him.
No, I'm optimistic of where we're at. I mean, obviously that we'll keep an eye on the price of oil. I think, but at least between now and the end of the year, I think it's not to say that the increased cost of interest is still not going to impact some companies. I'm not in the camp that thinks we're going to go from, where we're at 5.25% on the Fed funds rate back down to 2%. I know there was a piece out, this week from, was it Deutsche Bank? It wasn't Deutsche Bank. It was the other big European one that, I don't remember. UBS. I think it was UBS, came out and said they're expecting the Fed to have to cut by 275 basis points.
Well, we were back on the CME FedWatch tool. If you look at it, there's no probabilities there's 100% probability right now saying that this can all change, but there's a 100% probability that we don't change all the way up until January. And then the next meeting in March is 72%. We're at 525, 550. So they're saying there's 0% chance. I always tell people and you pointed this out, you got to take this with a grain of salt. I think it's more about the changes in sentiment. So I wouldn't say there's 0%. There are people saying that there's no chance. The market is saying no chance. What I would say is the market believes there's a very low chance that we're going to raise rates anymore. The market is saying we're done raising rates. This thing has always been a perpetual curve. If you go back and look at this almost 2 years ago, 16 months ago or so, it still looked the same. It said, in 3 or 4 months, we're going to be cutting rates. And it's been perpetually that. I do think we're a way off. And you and I talked about this, I think, on a previous episode, the AI analysis that I've done correlating S&P 500 to Fed policy. The best thing that can happen for the market is a stable Fed, in that we're going to not change anything. If you look at the 3 conditions of how does the market behave when the Fed cuts rates, when they raise rates, and when they hold rates, the number one highest correlation to positive returns is stable rates. So that's what we want. We want the Fed to not change policy. Actually, when they cut rates, it normally does have a pretty quick positive response, but usually it's happening prior to a recession, and then the market tends to react afterwards. So cutting does actually help the market, but the best thing for the market is a nice stable policy. And that's what I take away from this data right here, is that we're going to be stable. Here we are in November. So that's December, January, February, maybe in March. So, we've got a good quarter or more of stability, which I think bodes really, really well for the markets. And I'm pretty bullish going forward. And on top of that, you've got the presidential cycle thing, where third year is always I think we've had one down year since like Eisenhower in the third year presidential cycle. And historically, the fourth year is usually up, just not as much. And I think it's setting itself up for a positive sort of response here. Just the way things are spelling out with the Congress the way that it is. We've got gridlock, which means there's nothing that's going to happen. Although you and I were talking before the show, there's one thing I'm really concerned about, is if you look at the VIX futures, there's an indication, there's a big jump between December, this is March, this chart here that we're looking at, this is December, this is March. There's a huge spread. So this is, in the top red line is June. And my belief is it's the government shutdown, which was going to happen today if we didn't get our act together, but we were able to get things together. We basically kicked the can down until after the first of the year, until January. And I think that the market has perceived that it's not going to be as easy come January to get everybody on board, because they didn't attach any regulation. They just extended it. And normally they're trying to attach other regulation and things like, let's cut funding to the IRS, or attach some sort of pork new highway for my state or something. Normally these other things get attached to it. This is a very clean bill, and they just punted it down until after the first of the year. So I think we're smooth sailing for the end of the year. It's hard to see anything on the horizon that doesn't mean it's not gonna happen. You agree?
So no, I agree. So I think the biggest thing on my calendar then is the turkey.
Is the what?
The turkey.
The turkey.
The turkey next week. Actually, Michigan, Ohio State is next week.
My inbox is being filled with Black Friday ads. Like, I thought it's not even like the Friday before Black Friday. Like, why am I getting Black Friday ads? Oh, by the way, Joe Kerner just shared a trade. I wonder what he's doing. Oh, he's on Microsoft. Boring.
Microsoft, yep.
I got one other thing I want to talk about.
Okay.
Did you catch this today?
No, nice.
This is my Uncle Warren, my squishable.
Nice.
I get hugs from Uncle Warren when I need warm and cozy. Yeah, I got this at the shareholder meeting last year. You need, dude.
I need to go.
Talk about it.
This year I'm going.
It's like you got a chance to go see the Rolling Stones or something, right? I mean, who is the greatest investor of all time?
Oh, it's
Warren Buffett. And you got a chance to see him for free. I mean, you got to pay travel expenses.
Yeah.
If we need to, we could share a room.
Nah, I'm good at that.
You get your own room? It's actually hard to get rooms.
I probably need to get them now.
Well, you can get rooms. You might have to be a little bit out. But, I mean, it's to be able to see a living legend alive. I don't think Charlie Munger's going to be there this year, but there's nothing else like it. I think.
How far of a drive is it from Des Moines? I got my best friend from high school lives in Des Moines. I'm like, I can maybe make a double trip out.
Well, for me, it's like 6 or 7 hours. So I drive my EV and I charge. So it's 7 hours for me, 6 hours. So Des Moines is probably 2.5 hours for me. So 5 hours, 4 hours.
All right.
Yeah, it's not too bad.
I might pull a double trip and do them both this summer.
Yeah, Des Moines is a nice town too.
Yeah.
Yeah. So is Omaha. But what I wanted to share was the reference to Berkshire Hathaway is the 13F. This is 13F season now. So you start seeing headlines of this fund cut or this fund bought. I'll put a plug in for Whale Wisdom. We had no connection with Whale Wisdom. I don't even have an account. I'm not logged in. But I love them for taking the 13Fs and doing a really good job of putting it together. So you can type in a stock, which I'll do afterwards. We'll look at Apple. But you can type in a fund. So you can type in Elon Musk, or anybody who trades over $100 million is required by law to file these quarterly reports. And if we look at what Buffett has added, so Liberty Communications, not the insurance company. I don't know who this Atlanta Braves holding. I think Liberty, this is LLYVKLLYVA. I think they're all related. They're just different listings. And I somehow think this is the same one because I think Liberty owns the Braves. I could be wrong.
No idea.
And then there's this Siri, which is Sirius XM Holdings. So those are all brand new ads. They didn't have those positions before. Well, so this is at new stock. Nothing really exciting to talk about here. The issue is what's being sold. And so here you got General Motors, which is now nothing. ATVI, well, obviously it's gone.
Yeah.
Because I see people say, oh, Buffett sold ATVI. It's Microsoft.
Yeah, they got acquired.
So they got acquired. Obviously he sold it. Celanese closed all of his positions.
It's a big sale in CVX.
Yeah, a big sell CVX. Look at that. I mean, 13 million shares.
Yeah.
That was $18.5 billion position, but he didn't sell all of it. Okay,
right.
So he still has it. Now it's still 5% of his portfolio. I mean, it's still ranked number 5. So that's the other way to look at this thing. So there's a lot of stuff that Buffett sold, a lot of Aon, UPS, and you can see that the ones that are blank here, J&J sold all of his positions. This I take as getting rid of the P&G and J&J. A fund manager like Berkshire Hathaway buys that when they perceive more risk in the market. So these consumer staple brands are excellent to own when the rest of the market is pulling back. The fact that he's closing them tells me he's bullish.
Yep.
Although he didn't buy anything. If we look at his overall portfolio, though, number 1 is Apple. So 50% of the portfolio is Apple. Bank of America, number 2, American Express, Coke, CVX. Oh, wait a minute. This is weird. Hold on a second. Let me change this. Market value. There's
Oxy.
Yeah, Oxy is way up at the top by market value. So this portfolio rank, I think there's something broken here because it also says
it's saying that there's 0% of his portfolio, but he still has $14 billion worth of it. 220.
Yeah, he's got a lot of it. It's actually it's got to be number 6. Well, it is. I don't know why it's not showing number 6 here. So I'm not sure how, I got to tell Whale Wisdom.
I will let Whale Wisdom know if something's broken.
I want a refund.
Yeah.
In fact, I want twice my money back. I want infinite money back. I don't pay anything to them. The other thing I was going to show you that for users, this is a cool feature to use. If you click on Apple or you search Apple, you can see who owns Apple and who's buying and selling, what funds have it, and you can see the price. So in general, we're not seeing any major changes yet being reported. This rolls up all the who's buying and who's selling. So I did see some headlines saying that some funds are dropping Apple, but I'm not seeing it here. Goldman Sachs has a forecast at 203 for Apple. I'm kind of mixed on Apple. I actually have a bullish trade and a bearish trade going on right now. So what are you doing on Apple?
I have a covered call on Apple right now. That is all.
That is all.
I had an exploding bull put that I took through earnings that I closed, had a nice profit, and decided to just go buy shares.
The other thing I wanted to share is that some of the companies that it's the time of year where we get 2024 forecasts coming out, and the likes of like a JP Morgan, Morgan Stanley, Citi, Bank of America, Goldman Sachs, etc., all coming out with their forecasts. And they're all sort of cautiously neutral, I would say. JP Morgan is a little bit more bearish. Morgan Stanley's Mike Wilson has been a long time bear, and he's finally come around, but he's still very cautious. Bank of America's kind of neutral, but Goldman Sachs has come up with a rather bullish. It's been catching the headlines over the past day or two because it came out yesterday. They're forecasting that the S&P 500 will be at over 4,700 by the end of next year. So any thoughts on what's your 2024 forecast? We haven't got there yet. That's a fun thing we always do in December. But
yeah, I was going to say, let's save it. To me, it'll depend on what oil does between now and the end of the year, because I do think that still could impact what the Fed does and what inflation does. I think it's going to also depend on, this is kind of a wonky one, but what the reverse repo market looks like and how much excess liquidity continues to drain. It's draining pretty rapidly right now, so which is not a bad thing, not necessarily a bearish thing for the market, but it may take some of the extra dry powder. I think a lot of people are jumping in and loading into the market right now. We've had a really good year, and so will we repeat back-to-back years really bullish? We could, but we've got to have some really good earnings growth to justify it. So I'm cautiously optimistic, I'll put it that way, for 2024.
Yeah, I've seen some headlines looking at the rate of change of money supply. And if you look at the rate of change of money supply, people are freaking out because like, well, we've never had, this much money coming out of the system. Well, we've never had this much money in the system. So
yeah.
This is money supply. And people are just looking at the rate at which we're coming out here. And if you look at just the steepness of this line, we've never seen lines that steep before because we've never had $8 trillion in money supply out there, real money stock. There's other kinds of money out here. This is just one way to look at it. But good old Milton Friedman says this is the only thing that causes inflation is money supply. So we print more money, there's more inflation, which makes a lot of sense because it has to go someplace.
Yep.
But keeping an eye on this thing coming down. And you mentioned the reverse repo signal or indication, which is the Fed's facility for taking the excess cash because banks have too much freaking money. And now that's under $1 trillion. It normally doesn't, it usually hovers pretty close to zero. And it is an indication. So we were talking with Paul McCulley when we were out in Jackson Hole. McCulley, the conclusion that we had was that as long as there's significant money in the reverse repo, there's no liquidity problem. There's too much liquidity. We have to see the reverse repo go away. Right?
We do.
Was that your takeaway?
Yep.
Let's see if I can find. Yeah, there we go. I'll pop that back up. So this is the Federal Reserve's overnight reverse repo purchase agreement, and so we're down here. You mentioned we're under $1 trillion. We were up over $2 trillion, But you can see with this thing, normally it's not something that gets used every now and then. It's just a spotty sort of thing. And just this thing was freaking us out. We saw it going up. But, maybe the bite, I'll bet you this thing going higher. Well, there's the Fed lending window as well, which is going up at the same time. That was probably giving us some warnings about the banking issues. That probably was a leading indicator, but this coming down again is not a problem. This is just excess money. There's 900.
I think it's a good sign that inflation is actually coming down and may stay down as this excess cash that's been out there. This might be a good sign that we can actually have inflation under control. So I'm cautious. Like I said, I'm cautiously optimistic looking into next year.
I kind of caught you off guard. We haven't really
that's good.
Spent our time every year. We do a forecast, and for bragging rights, take a look at who can pin the tail on the donkey in 12 months from now. So that's always a fun thing we'll do here in about a month.
Let's do another one of these next week, you and I. Black Friday. And share.
Yeah, let's do another episode of Black Friday.
Our Black Friday shopping deals that we find.
Okay. Well, there you have your excuse from going shopping with your daughter. Honey,
there you go. I got to do a recording.
Tell her to do it online.
Yeah.
So one thing I did want to mention for people who are members of Trader Oasis, we have 3 different levels of membership. The standard and advanced members, we actually talk about real trading strategy, real-time stuff like what we're doing in our portfolios, and share that with you, real trades, real ideas on a weekly basis. Next week, I'm really excited because we've got Lex Luthinghausen coming back to join us. We had Lex on before. You folks probably want to go back and check out that episode if you haven't seen it. He's a former market maker, help you understand how market makers work. But Lex has been trading 0-day options, and I see them and I'm watching them, and I've spent some time talking with him, and he's using the Trader Oasis platform to do it. And he's showing how some of the tools that we have are make it pretty easy, apparently, to make money. So he's got an interesting strategy. It's not what we traditionally teach, but I know that we have some clients who are very interested in it. And by huge request, we're doing that seminar. We're going to do that event on Tuesday, the 21st. So just next week. You do need to be a member, a standard or an advanced member at Options Animal. So for as little as $50, it might be worth it for you to jump on. There's tons of other benefits as well. But for those of you that are interested in catching that session, and it will be recorded and available later. So encourage you to go to traderoasis.com, check it out. There's tons of benefits. It's more than just a trading platform with really, really good commission rates. There's a lot more going on there. And I think you might like it. If you like what you're hearing here, you get a lot more frequent and I think higher quality real trade ideas throughout the week.
Couldn't have said it better. Come check us out.
You gonna be there?
I'm even wearing my Trader Oasis shirt.
I noticed that. That looks good.
All right, it's good talking to you, friend. Thanks.
You too.
Thanks everyone in YouTube land for listening to us and our musings for the day, and we'll see you again at the next one.
I'm not going to talk to you until next week. If I don't see you before, have a happy Thanksgiving.
Yeah.
Same for everybody else there.
Same. Yeah.
Greg and I are thankful that you're here. So please like, share, subscribe, and feel free to comment, and we'll look forward to seeing you again. If we don't do one sooner, we'll definitely see you on Black Friday.
Absolutely. Thanks, everybody.